by the link, and they'll be.
Yeah, I can tell you want to say that. You want to go again. All right. Short one there.
Okay, try me again. I thought you might go. I thought you were going to say.
Normally I go on a long mission.
Do it again. Just say thanks, Graham. I'll do the rest.
Okay, ready?
Yes.
All right, thanks, Graham.
Yeah, thanks, James. I think this is.
Yes, today, this is going to be one hell of a blooper reel. That's for sure. Okay. Are you ready?
Yes.
Hey everyone, welcome to this edition of the Global Crypto Market Analysis. I'm James Preston.
And I'm Graham Tennant.
And we are back in the office. Yes, we have decided to take the leap. We have all of our social distancing rules in place, as you can see. We have all the protocols. We have our strict measuring requirements of temperature measurements and all the recording processes required. It's disinfecting everything, masks for various interactions. So we are 100% safe and complying to all the regulations. So it's good to see you in person.
Great to see people in the flesh, huh?
It really is a welcome return. So before we get into this week's analysis, this edition is proudly sponsored by Stewards. Stewards are a licensed financial services provider based in South Africa. So Stewards have created a cash management strategy that takes advantage of price inefficiencies between the offshore price of Bitcoin and the South African price of Bitcoin. And all you need to do is invest your money into this strategy and sit back and allow their strategy to take advantage of those price inefficiencies. So if you would like to take advantage of that and get on board with Stewards, simply email offer@globalcrypto.tv. So right now though, Graham, let's get into the charts and what they're saying. It's been a very topsy-turvy period, hasn't it? I mean,
it has. I mean, the market's done a lot and it hasn't at the same time.
Exactly. I mean, it's we've seen terrible drops. We've seen exciting jumps. We actually did for a brief period wick into $10,000 quite recently, but then shot straight back down, and we just keep returning to that middle 9,000 range.
It's been an incredibly frustrating time as a trader. And also as an investor, because you're waiting for this price to break out of the 10,000 level and out of the structure that we've got, and it just never takes the next step to actually get across that line and then keep on going. And it's always getting sucked back towards that 9,500 odd zone, and that 10,000 level is acting as a really strong resistance. So very frustrating, I think, is the way I'd sum up the last couple of weeks.
And looking at your chart there from my 1.5 meter distance from you, we are still playing inside that symmetrical triangle.
Yes, we are. So again, this is the macro view, and I mean, not much has changed. I mean, even though we haven't done a market analysis for a while, on the macro time frame, there's really not too much to speak of. This 10,000 level has held firm beyond the couple forays that we've had across that 10,000K, but it's been hovering around that level and no clear break of that symmetrical triangle. So not too much to comment on the macro time frame.
So where do you sit though in terms of your bias? I mean, just absolutely 50-50.
I'm still going to just say 50-50 on a macro time frame, and I'll show you why. So let's drill down into the shorter time frame, because that's where we should be seeing some indication of the market leaning one way or the other. And even though we have really battered at this 10K level, it's been resisted, and we are seeing buying coming up at higher prices each time. So that's the one bullish thing to point to in this scenario, is that the buyers have stepped in earlier on each major occasion that we have seen a significant sell-off from that 10,000 level. I really did expect it to move one way or another far earlier than what we've experienced right now, but it just keeps us waiting, which is frustrating. But look, we could be looking at a ascending triangle So that is clearly, you've got your 10,000 level and we've got the buying coming up underneath. So break above 10,000 level, as we've always said, would be very bullish. We did get it. It was a fake out, not a breakout. So I wouldn't be at all surprised if we do in break up to the upside. But if you then just do look at the loss of momentum that we've had and how long in the tooth this consolidation period has been, that starts to say to me, look, the bulls do look quite exhausted. That 10,000 level is going to hold, and at some stage we're going to see a significant sell-off that would bring us further into that symmetrical triangle. That doesn't mean that I'm bearish for the longer run, but that just means that we probably have to wait a little bit longer till we get our break of 10,000 and beyond. So yeah, that's in summary where I'm sitting right now, which is firmly on the fence.
All right, and then you are bullish fundamentally.
I think there's an interesting dynamic between what the short-term fundamentals of the picture that we're seeing and then the longer-term fundamentals. So the shorter-term fundamentals, obviously we've had the COVID situation, which is putting a lot of stress on the global economy. Okay, it doesn't matter which country you're in, we've all felt the effects of it. But what's interesting is the activities and the stance that the Fed has taken. So they obviously control interest rates and the money supply into the economic system. And there they've essentially been the term is dovish, which means that they're looking to provide support to the financial system through quantitative easing. Maybe they're not calling that, but it's essentially creation of new money, and they're keeping interest rates excessively low. So that's really encouraged investors to take a more positive stance, a risk-on approach. So that would encourage them to move into equities, into properties, into high-yield bonds, for example, so these are all higher risk assets, which is supporting these markets and seeing, and that's not good. That's not a positive effect for your safe haven assets like Bitcoin, like the dollar, which we've seen come under pressure, like your gold and silver. So I think that's part of the reason that Bitcoin has been kept bottled up, is because of investors being allowed to seek higher risk type of returns and higher risk assets. And that's the short-term view, but I think that activity only makes the case for Bitcoin in a longer-term view more attractive.
So that move by investors into those more riskier assets, is that because the stimulus packages are supporting those markets?
Yes. And I mean, the Fed has come out explicitly and said, well, these are the markets that we're actually going to support with direct purchases that they're adding to their balance sheet. And when you consider that, the junk bonds index is one that they are actively purchasing, look, I'm scratching my head and saying, well, what business does the Federal Reserve have in actually directly wanting to own assets of the junk bond market? And we've seen ridiculous things like Hertz and other scenarios where companies have declared bankruptcy and their stock price goes up. So bad news is almost good news in some ways. So I think it's quite a bizarre situation that we're finding ourselves in, but I think it's indicative of the decay of the financial system. I think it's going to come under a lot of stress, and that's where I think Bitcoin comes into its own as that system, as the integrity of that system starts to be called into question more and more with this type of activity, which I don't believe is very helpful in the long run for the global economy.
Well, that's exactly it, isn't it? It just looks like they are simply kicking the can down the road and in essence creating a bigger problem, because when this thing does finally go bust, it's going to be horrific.
That's definitely the way I see it, and it is concerning for sure. And this is where Bitcoin provides that potential insurance, that potential hedge against the failure of a financial system that, in my view, is completely over indebted, with asset prices overinflated. And when that situation needs to come back into or correct back into an equilibrium, but in the same breath, we see in financial markets things don't correct back to the mean; they overextend. So if you talk about things going extreme in one direction, you then expect it to come to the extreme level in another direction. So that's the concern I have, and that's the case for Bitcoin really in a nutshell, and why I'm so bullish.
Yeah, protecting your purchasing power in essence in the long term. So it's going to be very interesting. Well, Graham, thanks so much for giving us the time today. We appreciate it. Let's see what happens. So we'll be back next week, folks. If you are watching the charts and watching the markets, of course, Graham is on our Telegram group. He's on Twitter, and we post all of his charts whenever we can as well. And this edition proudly sponsored by Stewards. If you'd like to take advantage of their cash management strategy, taking advantage of price inefficiencies in the Bitcoin market, simply email offer@globalcrypto.tv. Until the next edition of the Global Crypto Market Analysis, don't forget to subscribe and share this video and podcast with your friends. From myself, James Preston.
And myself, Graham Tennant.
It's goodbye.
Cheers for now. By the link, and they'll be...
Yeah, I can tell you want to say that. You want to go again. Graham, thanks so much.
Thanks, James.
All right. Short one there.
Okay, try me again. I thought you must go. I thought you were going to say...
Normally I go on a long mission.
Do it again. Just say thanks, Graham. I'll do the rest.
Okay, ready. All right, thanks, Graham.
Yeah, thanks, James. I think this is... Thanks, James. Let me try again.
Yes, today, this is going to be one hell of a blooper reel. That's for sure. Okay.